This risk management strategy has single-handedly turned me profitable. My name's Mason and I day trade stock options almost every single day, and I use this risk management strategy every single time. If you also trade stock options, click like and click subscribe because no one really trades stock options. Everyone's on futures, and that's probably because they don't understand the accelerating returns that options can have, and risk management strategies like this, they give you a huge advantage. So let's go ahead and jump into it. This risk management strategy will actually let you win trades more often, believe it or not. It'll make your losses smaller, and it can provide completely risk-free profits some of the time as well. So let's start out with this example here. You can see that we've got a stock that is trending here. It's within an uptrend, and we've got this key level here marked where we were underneath it. We rejected the level a couple times. We then broke above, and now we're testing it as a support level, and we've gotten a bit of a bullish reaction here. So let's say we went ahead and entered off of that bullish reaction, and we've got our stop loss at a critical level right here below the low. Now, what everyone will have you thinking is that you have to target a 2-to-1 or a 3-to-1, something like that. As far as your risk to reward, you have to target something greater than a 1-to-1. Otherwise, it doesn't make sense. And I think that is completely untrue. I almost always target a 1-to-1 risk to reward, but with a little bit of a twist. Now, I target a 1-to-1 specifically because it'll let me win trades more often. Worst case scenario, I've got a 50-50 chance of winning, but with a little bit of strategy, you're trading with the trend at least, you're gonna win much more often than 50%. I probably win about 80% of my trades, and that's because I'm only targeting a 1-to-1. Yes, my profits are gonna be a little bit smaller, but I win so much more frequently that it really doesn't matter. So let's go over this example. Now, let's say I entered this position here and I entered with 10 contracts. There's a couple of options that could happen. First is we could obviously be completely wrong and we get stopped out. And if that happens, we take our stop loss on this critical level here, and that's it. What I often like to do with this sort of situation is I like to set my stop loss with limit orders. And how I do that with options is I will look in the options chain, I will look at the option contract's price at this low that I'm targeting. So let's say my option contract is worth $100 at this low right here. What I'll then do is I will set a limit order on my contracts of like $90 or $95, which is a little bit below 100. And so doing that makes it really easy for me to take my stop loss in this scenario because no decision making is needed on my end. All of a sudden, boom, the contract is gone. It automatically sold it and I'm out of the position. And as much as that sucks when that happens, that's the right thing to do. You need to stop out at your stop loss 100% of the time. Now that's worst case scenario. Let's talk about the other scenarios that happen the majority of the time. So what will often happen is you can see the market go up and you hit your 1-to-1. Now when this happens, I take profits on about 80% of my position. So in this situation, I've got 10 contracts. I would have sold 8 of them on this high right here. And as soon as I take profits, I then move my stop loss to break even. So now, even if my trade idea is wrong, but we got a little move up before we went down and we were incorrect, I still made money. I took majority profits here, and then my runners got stopped out at break even. And I'm happy. I was wrong, but I made money. The other situation that happens a lot of the time as well is that we're correct and the market keeps going. And when this happens, we've secured the majority of our position at this 1-to-1, but the 2 positions that we didn't sell yet continue to go. And when you're choosing strike prices that are slightly out of the money, the gains that you make on these runners, they actually accelerate over time. So these runners will become massive pretty quickly if you're correct and you hold them. And look at the risk to reward ratio now. This is a 158 RR here. So it's way better than a 2-to-1 or a 3-to-1. And this is the reason why it's okay for us to target a 1-to-1, because these runners will make up for it massively. These runners will greatly outweigh your losses when you take your stop loss. And so it really becomes a lot like we're targeting a 2 or a 3-to-1 risk to reward, but we're just doing it in such a way that allows us to absolutely maximize the profits that we can make while minimizing the potential risk that we're taking. And doing that is the key. If we can make risk-free profits some of the time, then we are going to win in the long run by a long shot, okay? So this strategy absolutely works. I use it every single day. I actually just used it today. If you want to watch the full trade recap video, I will link it in the corner. But here's the trade I took. It was essentially a 2-to-1, but I had risk-free runners going, and I took majority at a 1-to-1 on this as well. And trades like this happen all the time, where you can target a 1-to-1 and have runners keep going. You could have entered another trade here with the trend like in this area, stop loss below the low. You target a 1-to-1, something like this, and then your runners would run the rest of the day, and your gains here would have accelerated as well. So that's the power of options, and that is also the power of this risk management strategy when using it alongside options. It's amazing. Let me know in the comments if you are going to try out this strategy. Let me know if you have any tweaks that you think would make it better. Let me know in the comments. I read all of them. I will reply to any questions that you guys have. Click like and click subscribe, and I will see you in the next video.